Hey, what's up, everybody? Welcome back to another Wealth Circuit Investing Hour. I tell you what, I normally really enjoy these hour sessions that we have on the Monday nights, but I am really super excited about tonight. Tonight, we're going to be talking about the strategy of our portfolio and what does that mean. And I tell you, I don't think you want to miss this broadcast. We're going to be talking about some really cool stuff for your portfolio. So I'm looking forward to getting to that. But anyway, I just want to see who all's here on the program tonight. So if you're here, shoot me a little note here and we'll just see who's here and then we'll get started. So we've got Mr. Income, who is Fenders 53. Is in the house. So that's great. Glad to have you here. You haven't been here in a while. And so it's good to have you, man. Jim Betts is here. He said, good evening, all. Purchases this week were RTX, which is Raytheon. MFC is, I can't pull it up off the top of my head. It has to do with chemicals, agricultural chemicals. Is it? Well, let me look it up so that I don't make a fool out of myself, which I'm known to do. Manulife. Oh, that's Manulife Financial. That's not who I thought it was. Manulife Financial. All right, good job. And CNQ, Canadian Natural, as well as Agree Realty. So nicely done, Jim. It's good. Good. That sounds like a good thing. My investment strategy is is to do what Kevin does. Well, my friend, I don't know if that's a good strategy or not, but we're going to talk about what my strategy is, and we'll kind of go from there. We got Rust Moments here. Happy Monday to you, my friend. Michael Swami is in the house. Good evening, he says. El Dynamico is here. Good evening, my friend, from out in San Francisco area. So we got Legendary. Legendary is here from Columbus, Georgia. My goodness. So Columbus, Georgia. I've got family that lives in Georgia, and I live in Alabama, so I'm not too far away. Not exactly sure off the top of my head where Columbus is, but I think it's in the southern part of the state, if my memory serves me correctly. So welcome to the program. I don't know if I've seen you on the program before. We've got Greg. He made it. Good to have you, Greg. And good evening to you. And we've got Billy Johnson. Billy, I haven't seen you in a while, my friend. It's been many moons since I've seen you on the program. It's good to have you here. Looking forward to the discussion tonight. Michael Swami is from Houston, Texas. So we've got folks from all over the place. I think my friend Billy is still in the Philippines. So that's we're worldwide on this program, guys. We are worldwide. So let's see. Yeah, Southwest Georgia. This is Legendary. Southwest Georgia, close to the Georgia-Alabama line. Okay. All right. So every once in a while I'll go down to like the Mobile area. So it's not too far, I guess, from where you are. So good deal. Fast Eddie from Dallas, Fort Worth. Good to have you, Fast Eddie, on the program. So I'm going to go ahead and get started with what I want to share tonight, and that is about my portfolio strategy. And I want to talk about that in terms of how a strategy is important for your investment portfolio. So I'm going to do this in a way where this is, guys, you know me, right? Class is in session. So I love to teach. And so I'm going to try to teach at least what I'm doing with my portfolio. You can decide if you like it or if you don't like it. You get to choose what you do with your portfolio. I'm not saying this is the right way to do it. I'm just sharing with you what I do. And so I think it's helpful to have different perspectives. And so anyway, that's why I want to share this with you tonight. It's going to be a bit of a personal thing because I'm going to share with you more than I've really ever shared before around the strategy of my portfolio. So with that, here we go. I'm going to go ahead and hit this. like that. Wow, look at this. I got the hat. I got everything going on. So this is the Wealth Circuit Investing Hour. It's a strategic dialogue. And what better strategic dialogue than to talk about strategy, strategic strategy. That's awesome. So let's go ahead and get started. What is strategy and why is it important? Well, I'm going to go ahead and define at least the way I look at strategy. Strategy is a plan for winning the game. So in order to know how to win the game, I need to know what game I'm in and I need to know my why. And I worded this specifically. Normally I'm more inclusive, right? What game are we playing? Know our why. But the reason that I said, what game are you playing and know your why is because every one of us is different. Every one of us has a different goal. Every one of us has a different why. And so it's important for you not to take, my strategy. I mean, the strategy is fine, but your why is going to be different than my why. And your goals are going to be different than my goals. So maybe part of my strategy works for you. Maybe the whole thing works for you. I don't know. We're going to share it with you and see. We're going to let you make that call. How does that sound? Okay. So strategy, knowing the game that we're playing, knowing why we're playing it, helps us to know what statistics are most important. So I see this a lot across YouTube. I've started, as you guys know, if you follow me on YouTube, that I have expanded my horizon in terms of the people that I listen to on YouTube, and that's been very helpful. I will say though that there is a lot of different perspectives, and so what's important for us is that we know our why, we know where we're coming from, we know what we're trying to accomplish, and then we can take bits and pieces from different places and put it together. But a lot of people, especially in the dividend investing realm, focus on yield and dividend growth. And while those are important, I mean, I look at those as well. It's important to know whether yield and dividend growth are going to get you where you want to go. We'll talk a little bit more about that in a minute. Another one that people look at is price appreciation. How much did the stock go up? And even on my Discord, and if you're not part of the Discord, in the comments below this video, please sign up for the Discord. We'd love to have you in there. We have more than 100 people there now, and we talk about stocks and stuff like that, especially this week. I mean, there's going to be a lot of earnings we're going to talk about in a few minutes. But one of the things we do is some of us share every day what our portfolio, how our portfolio did. It went up or went down, and the percentage. So, price appreciation is a metric, is a statistic that some people look at. Total return is a statistic that some people look at. Volatility, holding gains. What does that mean? That means the holdings in my portfolio, how much have I made on those? So, if I've held a stock for 5 years and it's doubled in that 5 years, they'll look at that holding gain and they'll say, I'm going to hold on to this because I've made a lot of money on it, not necessarily thinking about whether they'll make money on it next year or not. And then, how much passive income am I getting? How many dollars of dividends? So, and none of those are bad. None of these are wrong. I want to just share with you some of the statistics that are out there, and how we tell what statistics are important to us is what strategy we have. It also tells us how our resources will be leveraged. So do we want to focus on value stocks? Do we want to focus on dividend growth stocks, dividend income stocks, speculative investments? Maybe we want them all. Let's see. Preparation. This is important, and I won't talk about this again, but preparation during downtime. So let's say we've got a football team, right? And so we know what game we're playing. We're playing football. We know which score matters. It does not matter who is ahead at the end of the first quarter, second quarter, third quarter. What matters is who's ahead at the end of the game. It doesn't matter how many turnovers you have. It doesn't matter how many penalty yards you have. What matters is What's the score on that scoreboard? That is the score that matters, and that's the score that drives our team to move that ball down the field. Our strategy for our investment portfolio is very similar. We need to know what game we're playing. We need to know which score matters to us so that we can determine what we're going to focus on, how we're going to make decisions, right? But then when the game, let's say the NFL game, they play once a week, or even college football, high school football, they play once a week. They've got downtime, right? They're not, pumping iron 24/7. They're not running sprints 24/7. What are they doing during their downtime? Well, they're watching film, right? They're learning. They're becoming better students of the game. They're getting a football IQ. And so what I want to share with you is that part of our strategy, and this goes for everybody, you can take this and apply it regardless of what your why is. We need to get our investing IQ raised up every month, every year. We want to be better next year than we are this year at investing. So that can be reading, it can be YouTube, it can be Discord. You come up with whatever it is that gives you the ability to prepare to be a better investor, to raise your investing IQ, and you will win. I'll share a story with you. This is something I've never shared here before, and that is I used to take karate, believe it or not, and I was a black belt in karate. And one of the things, I was in an instructor training program. One of the things that they taught us there is how do we go from being good to being great? And I know there's a book by Jim Collins, From Good to Great, and it may have even come from that, but I didn't get it from that. I got it from this instructor training. The difference between good and great is this much. So if I can get this much better every day, then just like what Einstein called it, the eighth wonder of the world, compound interest, just like compound interest is the way to wealth, getting this much better every day is the key to being a great investor. So we get a little bit better every day. We're not looking for big chunks. We're looking for little bits, growing on little bits, and then eventually we're going to be real good investors. So anyway, sorry about that. I digress. That's not in the program here. All right, so moving along. Strategy articulates the game we are playing and how we will win it. It's important. We can't know that we've won unless we know the game we're playing and the score that is important to us. All right, so let's move forward. Stock portfolio strategy. This is my stock portfolio strategy, okay? This is the Burgess family stock portfolio strategy. It is that I want to build diversified holdings in companies that have long-term competitive advantages and provide overall expected total returns of at least 8% per year with below market volatility. Portfolio holdings should have an investment thesis or theses, there may be more than one, of value, dividend growth, income, and or speculation. So that's the strategy. It's pretty concise. I could probably take a few words out, but I want to point out some things that are important in the strategy. Are you guys ready? Here we go. First of all, strategy defines the game and the scorekeeper. So the game is I want to get total returns. So total returns is important to me. I've seen several videos this weekend about investors, and I think it was my buddy Russ, my buddy Ryan, I think even my buddy Ari from Blue Lion. I think all three of those talked about how at first when they got into dividend investing, they were focused on the dividend yield, and now they're kind of shifting more toward a total return perspective. And I think that is solid. I think that's right on. And so all three of those guys, kudos to you, because I think, at least for me, total returns is a key metric for our portfolio. So expected total returns of at least 8% per year with below market volatility. So why don't I say in here, with total returns matching the S&P 500? It's because the caveat below market volatility. If and I'll show you a graph of this in a minute. If I'm going to get rid of volatility, that means I'm going to lose out on peaks, both higher and lower. I'm gonna shrink that volatility down, and what that does for me as a retired guy gives me the ability to sleep at night. It gives me a portfolio that's not going to move typically as much as the market moves either direction. I'm going to be in a lot smaller volatility pattern. So those are two key things in my strategy. Let's point out, here's the chart I'm going to show you. You ready? You ready? Here we go. Boom. All right. This is volatility. And so this shows the total returns from 2021, 2022, 2023. And I didn't say this appropriately, but it's supposed to say year to date. And I don't remember, it was a week or two ago that I put these numbers together. So this is the yellow line is the S&P 500. And so you can see in 2021, it was up 28.7%. 2022 it was down 18.1. 2023 it was up again 26.3%. And then in 2024 it is year to date, as of a couple of weeks ago, 18.6%. My portfolio, and I will full disclosure, in my role before I retired as the chairman of the investment committee of the company, it was better for me not to have individual investments. So I ended up with a lot of mutual funds and things like that. Then when I retired, I wanted to build my own portfolio. I was unencumbered by the fiduciary responsibility of being chairman of the investment committee. So I was able to kind of branch out and go out on my own, so to speak. So my portfolio started, my individual stock portfolio started in 2021. Now I had been investing prior to that, but I converted everything over to mutual funds when I became chairman of that committee. So it was really important because that committee managed about $14 billion worth of funds, and I didn't want there to be any indication that I would do anything for my own personal gain there. So I had to move everything to mutual funds. That was around 2017 or so, something like that. And then in 2021, I retired. When I retired, I was like, okay, the doors are off. I'm going to build my own portfolio here. And so that's what I'm measuring from is 2021. And so I began, I kind of feathered things in through the years. So I don't know if 2021 is a great indicator, but at least it is what it is. That's the return. It was a weighted average 8.9%. The S&P was a 28.7 return. But then the next year, you guys remember the big bear market, right? Big bear market came, it kicked everybody's butt, but my portfolio was up 1.1%, not down 18.1%. So you can see the volatility. Let me come over here with this marker. You can see that the volatility that the S&P 500 has, whereas my portfolio has a much tighter realm of volatility. Now, that means I'm not going to make as much in the good years, and I'm not going to lose as much in the bad years, but it helps me sleep at night. So I call it the pimp model. It's the passive income from my portfolio. It's pimp. So I'm pimping my retirement. And so you can see there that the pimp model has a much tighter volatility range than the S&P 500 does. Not that there's anything wrong with the S&P 500. I used it as I was younger, actually until I even have still some in the S&P 500. There's nothing wrong with it. It's just that I'm saying that at this point in my life, I need things to be a little tighter in terms of volatility. You may not, right? And so that's why we get to pick how we're going to do this. Volatility and total returns, those are key. It's defined by my strategy. total returns, volatility. Those are the two things that matter to me. There are other things that matter, but those are the two things that I am using to say whether I'm winning the game or not. Okay, then it also defines how resources are leveraged. So I'm looking for diversified holdings in companies that have long-term competitive advantages, and they've got to have some investment thesis, right? There's got to, or more, one or more theses. So here we go. This is my portfolio by sector. You can see it is well diversified. This big purple section is the S&P 500 ETF VOO, VOO. So that big segment is in and of itself diversified. So my portfolio is well diversified. I don't have any issues with my diversification. I have 24 holdings, including the ETFs. I'm now at 2 ETFs. So I have 22 individual stocks, 2 ETFs, and that's it. 24 holdings, but I am completely diversified with 24 holdings. So you can see that down at the bottom. The next thing I'll share with you is this is what I call the pimp category. So these are the theses, right? The pimp category. So you can see over here on the right, I've got it split between cash, dividend growth, ETFs, income and value. You notice I don't have any speculative investments in there. That could happen, and so I'll leave the door open for that. But it's pretty rare for me to kind of speculate on a company. And typically that would be a company that wouldn't be a dividend-paying company. It would just be a speculative investment. So you can see that is even pretty well spread out. I've got, it doesn't say how much value. The value is the purple. The ETF is green. Dividend growth, you see that's probably the bigger slice, but it's not by a ton. And then I've got income stocks in this light blue. That little sliver of dark blue there is the cash balance in the portfolio. So we got that. Now, the other thing that my strategy mentions, and I'll go back to it, is that I'm looking for at least 8% per year. Why is that? Because when I think about retirement, and I think about one of the biggest worries that we have is outliving our money, right? So if I'm able to pull dividends from my portfolio and live on those dividends, then my portfolio doesn't go down. As a matter of fact, I'm hoping that I buy companies that'll be better next year than they are this year, and their prices are going to go up. So my portfolio should grow, and I should get some, dividend raises along the way. So my income should rise as well. So anyway, that's what I look for. I have created a proprietary way of calculating what I believe the 1 year out portfolio annual return would be, total return for my portfolio based on the holdings that we have. And what that's coming up with at the moment is 9.4%. So if my goal is 8%, I've got a portfolio that I believe is going to get me 9.4% in the next year. I'm in pretty good shape with where my strategy is. I could make that higher, but it creates risk and volatility. And so maybe I don't want that, right? So I'm not out there trying to grow my portfolio as big as I can get it. I'm trying to be reasonable around an 8% return, 8 to 10. And so anyway, that's kind of where I am. The market has run up. This number was a bit higher. It was in the 11.3 range, and then the market has run up here recently. So it's now down to 9.4 because obviously as prices rise, then the expected return for a year out goes down. So that's that. That's everything about my strategy. Hopefully that was helpful. So if you got any questions on it, would love to talk a little bit more about that. My wife has started this little robot vacuum cleaner, and it's slamming against my door here. So if I get distracted, that's what that is. Okay. Let's go back up here. Yeah. Columbus, Georgia, Jim, is a suburb of Fort Benning. That's great. All right, let me get that out of the way. There we go. Oh, Fast Eddie's reminding us, hit the like button. That would be awesome. You know what that like button does? I think, I'm not really sure, but I think it kind of helps the algorithm to say, hey, you know, there's some good material in here, something you might want to check out. So that it would cause it to be shown more. So that would be good. So Greg says, I won't take your strategy. I'll just pretend I came up with it myself. That's all right, man. Even if you change one letter, it's yours, my friend. So recently started buying AVUV small cap value ETF with a 2% yield. That's not a bad call, Michael. You know, small caps have been undervalued actually for quite a while now. And I've considered going into some small caps, but I just can't find anything that I like. So I may just have to sit this one out. But I think that's a good move, in my opinion, for whatever that means. So Jim Bett's portfolio strategy equals a mission statement. Yeah, I think they're pretty close. You know, I kind of think of a mission and a purpose statement being pretty similar. You know, what is my mission? What's my purpose? I would say the strategy is a little different because a strategy says not only what my mission is, but it also says how am I going to achieve it? How am I going to win in that game? So as long as your mission statement not only says what my mission is, but how I'm going to accomplish it, then I think they're the same thing. So, all right, Michael Swami, I've been looking at that as well. XSMO, but XSMO dividend lacks and expense ratio is up there a bit. So, yeah, those are a couple of good choices there, and I think those are great moves, guys. Let's see. Let me catch up with you guys here. All right, Rust Moments says that he bought McDonald's. That 20x forward PE looks juicy. Yeah, it does look juicy. Might look a little greasy too, but you know, I read an article and I read it on my phone, or I may have saved it so we could talk about it here. But I'll give you the Cliff Notes version. It was about McDonald's. It was about their value meals. They started in July, putting a $5 value meal together. It caused a lot more foot traffic in McDonald's in the month of July than they were expecting. Even it was highly successful. So I think that, and so what they've decided, it was going to be just a July promotion. They've now chosen to expand that through August, and they may even go through September with it. The challenge is it's not as profitable because inflation is driving costs up on everything. So $5 does not buy what it used to buy. So, but the good news is for any of you who happen to be following Lamb Weston, the good news is that, you know, those value meals hopefully are going to push some volume through our investment, Lamb Weston. So I'm looking forward to seeing that. They actually report earnings on Wednesday. So Wednesday is going to be a great day. I don't know how their quarter is going to go. I think what we're going to see with Lamb Weston is we're going to see some improvement on their ERP system, which is what caused a big drop for them last quarter. I think if they can say, hey, that's kind of behind us, or at least we have a plan for it to be behind us, I think that's going to be a good sign. I also think that while they probably didn't get a lot of momentum from this value meal promotion, I think they probably got some because the stores would have had to, you know, ordered some extra French fries, right, getting ready for the promotion. So I think we might see a little bit of a bump there. So I'm looking for Lamb Weston to do pretty good. It went up 2.41% today, but I'm still down on it. Let me see. Yeah, I'm down 3.2% on it. Depending on what it does tomorrow, I may buy some more. It is currently 5.55% of my portfolio, which is one of my larger holdings. I think it's second to Johnson and Johnson. So anyway, those are my thoughts. Glad you pointed that out about McDonald's, my friend, because that takes me down the road of my newly found French fry company, Lamb Weston. So we'll see. Hopefully that'll go well. Eli, Mr. Kevin just got here. I'm glad you're here, my friend. Glad you are with us. So Michael says your opinion is valued. I appreciate that, man. But like I told somebody the other day, they wanted my opinion on something. I said, opinions for me are like elbows. I usually have two of them on any particular subject. So, I have an opinion for it and I have an opinion against it. So that's okay. All right. Jim Best wants me to refresh his memory. What is my other ETF besides VU? And Jim, I own an ETF with a ticker symbol SOXX. That is my semiconductor ETF. I wish I had had the clairvoyance to pick NVIDIA, but I just didn't know enough about the space. I didn't know enough about the company and companies in that space and where the technology was going. So I picked an ETF so that I could get a slice of all of them, all of the ones that mattered anyway. And it has done very well. Matter of fact, it's one of the holdings that's bringing down my expected annual return because it has gone up so much that it's kind of driving my formula a little wonky. So there's that. So yeah, VU and SOXX, SOX. Those are my two. Let's go to McDonald's. It's on me. Fast Eddie says he's taking us all to McDonald's, regardless of what city you're in. Yeah, so Fast Eddie, I appreciate that, my friend. If I ever get to Dallas, I'll give you a ring. Legendary says he's been looking at RTX. Wanted to come down, and AVGO, which is Broadcom, wanted to get Broadcom a while, but was too expensive. Now is a good time. Yeah, I think let's take a look at a couple of those. I'm going to go ahead and share my screen here. If I can remember how to do that. I got to stop that one. Share the screen of all of my apps so you guys can see them. There we go. All right, here is this is Tip Ranks. It's one that I use a lot. Let's take a look at RTX. So RTX is let's see, the analysts have it at a average of 108. It is currently trading around a 103. I agree with you. That's not quite enough margin for me. Legendary. I think, holding out. I think let's see, who was it? Was it Greg or was it Daryl? I think Daryl came up with some seasonality around RTX. And what he concluded is that June and August were good months to buy RTX because it typically dips in those months. So I bought some in June, and I may buy some more in August. We'll just have to see. But I think I'm with you on that. I think it's just a little touch high for me right now. Just real quick, let's take a look. This is one I was looking at earlier. RTX Corp. Let's see what the fair value is. 115. So, in terms of fair value, it's about what? Oh, I don't have to do the math. Here it is. It's an 11% discount according to Morningstar. So, it's not terrible, but I think we can get a little bit better price. So I'm kind of with you on that. Let's take a look at AVGO. I don't follow Broadcom because I have that SOXX ETF. So I typically don't follow the individual stocks in this, but let's take a look here. Average of 196 is currently trading 161. It's not a bad time, looks like. Let's look at the year-to-date numbers. It has gone up year-to-date, though. It's looking pretty good. Let's see what Morningstar says the fair value is. AVGO. Fair value is 155. So they're saying it's trading pretty much at fair value. So what that means for me is it would be a buy. If I wanted to buy it, I could buy it. I'm buying it at what I believe the fair value is. Doesn't give me any margin of safety, in case I missed something or in case Morningstar's missed something. But it is at fair value according to Morningstar's numbers. So it's not a bad buy at this point. So there we go. Those are my thoughts. Let me hit that. So anyway, great points. Yeah, good points, my friend. And again, I'm glad you're here, man. I'm excited about that. Billy says Lamb Weston is looking good. If it doesn't work out, we'll have plenty of French fries to eat. Yeah, absolutely. So buddy of mine has bought Lamb Weston as well, and sent him a note or a text yesterday, and he texted me back and said, "Eat more fries." I think it's going to do. I think long term, I think it's going to do fine. I don't know what it's going to do this quarter. I really never can predict that stuff very well, but I do believe long term, Lamb Weston is going to be a good holding for my portfolio. I may not always keep it at 5.5%. I might even, depending on how the quarter comes out, I might even, go higher than that. Let's say if they have another bad quarter, I might decide to go in deeper. Who knows? I don't know what I'm going to do yet. So we'll see. We'll see what happens. Let's see. Jim says, Fast Daddy, only if the ice cream machine is working. That's where Fast Daddy said, let's go to McDonald's. It's on me. Jim says he is only going to go there if the ice cream machine is working. So that's probably gonna mean that we're not going to McDonald's, right? It's never working. Oh yeah, Michael Swami says, which is never. Okay, Greg says August RTX ramps up. So that it may be that I got the months mixed up, Greg. I don't remember. But I do know I bought some in June, and it was down below 100. So it was 99 something that I bought it for. So anyway, maybe not. Maybe RTX ramps up in August, and we missed our opportunity. But you know what? If we did, we'll find another one. So yeah. So Legendary says thinking maybe 90s or 80s. Here I'm gonna do something real quick. I'll show you my purchases of RTX just because it's fun, not because it matters. Here we go. Let me go to, I know you can't see it yet. I'm going to go ahead and get it pulled up. Hopefully it's all in one portfolio. Sometimes I'll do that where I'll buy it in two different ones, and I can't see the transactions. Let's see. This is 200.726. Sorry, guys. Let me just make sure I got all the shares here. Nope, unfortunately not. So I'll have to find it. Have to be in because I got a rollover, which is a traditional, and then I got a Roth, and so sometimes I buy it in two different places depending on how much cash is in each one. All right, so we're gonna look at this one first. So I'm going to go ahead and share this screen. If you guys are ready. Oh, it's already there. All I got to do is show it. Okay, here we go. So RTX, you can see it here. So you have to keep this in mind because we're going to go to another portfolio where I also have some shares. So I bought some on September 12th of 23 for $73.89. That was a great buy. I should have backed up the truck, but no, I was trying to be greedy and thinking it might go down just a little bit more. And, sometimes I shoot myself in the foot when that happens. I bought some additional on December 14th at 81.69. And then I had this in a particular account at the time that did drip. It automatically reinvested. So it picked up 0.726 shares at 81 something. So let's go to the other one. Let's look at, here it is. Pull up the transactions. You can see in July, which was, it was July. It was not June. I lied, Greg. I said I bought some in June. It actually was July 2nd. I bought some July 2nd for $99.95, right under $100. So I got 100 shares of that. So if I look at it in total, I'm sitting with 300 shares with an average cost of 88.876. So I'm sitting pretty good on it. It is 2% of the portfolio. I'd love for it to be about 2.5%, but I think I'm going to wait to get that other small piece in the portfolio. So, but yeah, I think if you can get it legendary for 90s or 80s, I think those are great prices. I'm not so sure that 99 is not a great price, right? So it just depends. We'll have to see how their earnings come out. Michael Swami says on RTX, I wonder if that's due to the government procurement cycle. I don't know. I don't think so. I think the government procurement cycle is pretty long term. So if you look at things like, if you look at companies like Lockheed Martin, General Dynamics, those companies usually have a backlog that'll stretch 2 or even 3 years. So anything that's really going on in that cycle is going to happen in the future. I'm not really sure, though, what causes RTX to have that seasonal cycle. If I knew the answer to that, it might be good. But I just don't know the answer. The other thing about RTX is it's about half government and half commercial. So they have the airplanes. I don't remember it's not coming to Collins. Collins is commercial, and so there's some commercial piece and government piece. So yeah, I don't know. Oh, according to Daryl, it's August is a ramp up. So if we're going to get it, now might be the time. Michael Swami says Broadcom's a core holding of his. It's through the roof. Absolutely. Great job, man. Okay, here we go. More ice cream machine. The McDonald's ice cream machine never works, but you don't know about it until you've sat in the drive-thru for 20 minutes. Sounds like that's a little bit, sounds like he's had some personal experience with that. So NVIDIA is running cover for AVGO. Yeah, absolutely. That's why I send my kids in to ask if it's working. That's great, Fast Eddie. That's why do we have kids if they can't do stuff like that, right? I mean, that's what we need them for. That's their contribution to the family. It's what makes the world go round. So that's a great way to use your friends. Use your friends. Use your children. So good job, man. John J is in the house. Hey, John, I just let you know, I did get your email, and I am going to respond to you very soon. It has just been crazy for me. I even watched my grandchildren today. So if I seem a little tired, that's why. I love them to death, but boy, they have a lot of energy. So anyway, so I'm going to get back with you, my friend. Don't fret. I will shoot you a response. Jim Betts says, fascinating. My wife sends me in, then she leaves and goes to Dairy Queen. Poor Jim's standing at McDonald's, and his wife has gone to Dairy Queen. And John says he's late, but you're never late, man. If you can make it, come on in. I'm glad you're here, buddy. Let's see here. Can I look up? This is John Schlumpberger, and let me know where your thoughts are. Did we look at that last week? I think we looked at that last week. And I don't remember what my thoughts were. So let's just look it up. Schlumberger. Okay, I will share this because it's much more helpful if you guys can see what I'm looking at. All right, here we go. So this is Schlumberger. It's the analysts are expecting it to be 64.83. It's currently trading at 49 and 44 cents. So there is a 31% upside, which is, that's in the range of Lamb Weston. So that's a pretty big upside. Let's take a look at the fair value. Its ticker symbol is SLB. Its fair value it's trading at a 17% discount. The fair value is 60. Its price is $49.67. So let's now take a look at Simply Safe Dividends and Schlumberger. I want to see what they do. So the dividend safety rating is a 60, borderline safe. Dividend yield of 2.22%. Their latest dividend increase was 10%. Let's see what they do. It engages in the provision of technology for the energy industry worldwide. Company operates through 4 divisions: digital integration, reservoir performance, well construction, and production systems, field development, hydrocarbon production, carbon management, and integration of adjacent energy systems. So I'm really not clear what they do. It looks like drilling rig management solutions, drilling equipment and services, land drilling rigs. So that makes more sense. Okay, got it. Founded in 1926. And Michael, it is based in Houston, Texas. So how about that? Borderline safe. Wow. So in 2020, they went down to 35, which is unsafe, with the plunging prices of oil. Not sure that matters to us now. So here's some things. Let's look at these numbers here. So last 5 years, this is what turned me off. I seem to remember this from last week. That they grew their dividend pretty well. Then they got to 2015, and then it was flat, and then it dropped in 21 down to 50 cents. Dropped by 75%. Down to 50 cents, and it has been going up here recently. It has a 2-year uninterrupted dividend streak and a growth streak as well. So it's looking pretty good in terms of short term. It's got a dividend yield that's 13% above its 5-year average. So it says it might be a decent time to invest. Earnings payout ratio. So you can see back in 16, 17, 18, 19, 20, their payout ratio was horrific in the 175%, 133%, 123%, 136%, 129%. Anything that's over 100% is not very good in my opinion. But now it's down, down below 40%, and actually next 12 months it's expected to be below 30%. So that's not bad, actually. The earnings per share has been growing, and it might have something to do with the oil prices, maybe. I'm not sure. I would want to find that out. What's causing their earnings to grow? It's a good thing, but I want to make sure it's not cyclical. So actually, we'll go to Fast Graphs here and take a look at that. They have been growing their shares outstanding. And they've got a nice return on invested capital. So that's a good thing. And let's take a look at interest coverage. Interest coverage looks fine. So, it's not my cup of tea because of this irregularity. But let's take a look at Fast Graphs really quick and see what they have looked like. There's a lot of cyclicality going on. I'm not looking at the prices here. Let me take those off. Take those transactions off. Oh, that didn't work. Oh, there it is. Take that off. Take the normal PE off. Take the dividend yield off. Dividends. All right. So let's take this off too. So you can see that SLB, this is Schlumberger. I think this is Schlumberger. This says SLB. Let me make sure I get the right one. SLB. It's got to be it. They don't give me any other options. But anyway, it goes up, down, up, down, up, down. It looks to be cyclical to me. So I would want to pick the spot. I'm not sure that this is a great spot to get into it with, because we never know when that down cycle is going to be. So for instance, 2016, when it was down around $15, the earnings were down around 15x or 15 times earnings. So earnings were about $1.14. So buying it then might have been a good thing. It went up and then back down. It went down even further the next time though. So I don't know. It's pretty cyclical, and I would want to study that a lot more, John, before I put any money on that. So let me know what you're going to do with that, if you're going to buy it, and what your rationale is. I'd love to hear that. Let's see here. Get that off the screen. So those are my thoughts anyway. Have you ever had a McGriddle? I have. I'm not real fond of them because, for me, if I'm going to eat a pancake with syrup on it, I want a pancake with syrup on it. If I'm going to eat a sausage or bacon, egg, and cheese kind of thing, I want it to be like a biscuit, not something that's sweet. That's just me, though. But, hey, they're not bad. All right. Jim says his cost basis for RTX is he's got 85 shares at $89.79. So that's pretty good, man. I think both of us are sitting really good in RTX. Wish I'd picked up more, but hey, if it had gone to 50, I would have wished that I had picked up less. There's that. All right. So Legendary wants to know, so there's a certain time to buy aerospace stocks. That's a great question. And so we've got a friend of ours who his name is Daryl. He does what's called technical analysis. So they look at, trends. They look at, moving averages. They look at, how the sentiment in the market. They look at momentum in the market. And so they're looking for the best short-term time to buy a stock. Technical analysis cannot tell you whether the stock is good to buy for the long term, but it can help you get a better entry price. So that's kind of what he's talking about. Is there a certain time to buy? I would say there's not a certain time to buy. But we're testing this theory out on the seasonality of the summer being a low time for RTX. But we'll just have to see. I don't know. I would say if you're looking at RTX, I think it's a great company. I think it is undervalued. So if you wanted to buy some, even now, I don't see any issue with that. I bought some. What's today? Today's the 22nd. I bought some 20 days ago, right? So it's. I would say if that's something you want to add to your portfolio, I wouldn't necessarily wait on hoping that it comes down in the month of August. So, but I have enough shares of it now that it'd be kind of fun to test that water. So El Dynamico, did you ever receive my email? I don't know. Oh, I did. Yeah. I did get that email, and I like the song, but not for my chat here. So it didn't fit my vibe. It was It was a great song, but it was not me. It was not country. It was not, Southern. So, but I appreciate you sending it anyway. I appreciate it, man. Yeah, you're not late, John. You're just fashionable. Oh, this is good to know. It's not Schlumberger, it's Schlumberger. It rhymes with negligee. Maybe they make negligees. Schlumberger. That's good to know. Thanks, man. I mean, see what all you learn on a live chat? It's really crazy what we learn. Mr. Income, oil services company, been around a long time, pronounced Schlumberger. There we go. French descent at one point, I believe. Awesome. So I have learned something. It's not Schlumberger, it is Schlumberger. So you'll have to remind me again next week because I will forget. Oh yeah, Mr. Income says definitely cyclical. Michael says that they just finished building a steel pipeline where Schlumberger was fracking a gas well. Awesome. Let's see here. John J says the thinking is drill, baby, drill. There you go. Hey, let me get you guys' thoughts. Speaking of that, let me get you guys' thoughts on something. EOG is a drilling company, if my memory is right, and and they've been doing very well over the past few years, and I own a few shares of that. I think Mr. Income even owns a few shares of that. But what do you think about if this Trump administration gets in? What do you think about are they going to do well in that environment, or with oil prices being down, are they not going to do so well? Let me know in the comments here what your thoughts are on that. EOG, what do you think for the future? I don't know the right answer. I'm just wondering. Yeah, Legendary says, I want to say they bought out Pratt and Whitney, which is about 15 minutes from where I live. That's why I'm interested in the stock. Yeah, they absolutely did that. They have the Collins Aerospace, and they have Pratt Whitney, and they've got one other. I think I'm just brain dead after playing with those kids all day. But anyway, they got one other thing. It was actually a big monstrosity of a merger with who was it? It was like Otis Elevator and who's that HVAC company? I don't remember it off the top of my head. But anyway, it was this two companies. They came together and then they split everything out. So they became two totally different companies. That's why if you're looking at RTX and you're looking at 10-year-old data, it was a different company then. I would recommend only looking at the last 5 years. You'll get a lot better consistency there. Slammer is in the house. He said he'll have to watch the replay. Had a call with mom. Dude, your mom comes first. So I'm glad you made the right choice there. And, you need to make that choice every time between any live stream and your mom. Your mom always wins. So good job, man. Michael says EOG is the only entity I know of that is a legacy company of Enron. Yeah, that is right. That's the only one I know of as well. Yeah. Jim says SLB, just like Target in the trailer park, it's pronounced Target. Yeah, Target, Schlumberger. At Millionaire Acres, it's Target. There you go. Russ says if EOG gets hit, then so does Chevron and XOM. Okay, that's a good thought. Yeah, their dividend growth rate is off the chart, Pat. Pat, welcome, man. I didn't know that you had joined us. Yeah, that's exactly right. And it was really kind of cool because there for a while they were giving these really nice Nice special dividends. So not only was I getting their dividend growth, I was getting these huge dividends, special dividends, and it was really nice. It was over a 10% return just on dividends, not even their stock price. So you're right. Their dividend growth rate is off the chart. Let's see. Mr. Income Fenders 53. If they have any sense, they will resist drill baby drill. That's what I was thinking. They tried that in 2015 as an industry and buried themselves excess in supply. Exactly what Trump desires. Yeah. So that's kind of what where my head's at. And I'm wondering if I should scale that investment back. What are you going to do, Mr. Income? There's a couple of other stocks. We're already at the hour. I was going to ask you, but we'll save those for next week. So Legendary says, I like the live Q&A. I've learned a lot. Great, man. I'm glad you were here. And, we're here usually every Monday night, 8 o'clock Central, 9 o'clock Eastern. So hopefully you can join us in the future. I just love kicking it around. We have a good time here. I have a good time, whether you guys do or not. It doesn't really matter. So, but no, I enjoy this. This is kind of fun. It's as close to a roundtable discussion as we can get on YouTube. So we'll go from there. So yeah, Michael's is helping me out with my memory lapse here. Otis and Carrier, I think, are split offs from United Technologies. That was the one. United Technologies was the other company. Yeah, Otis Elevator and Carrier is an HVAC company. Those, I think, split off individually, so you can actually buy Otis and Carrier on the public market. United Technologies is no longer, I think, in existence. Actually, the way it worked was United Technologies is the one that carried forward, but it adopted the name of Raytheon RTX. Why they did that, I'm not really sure. But legally, the entity that survived the merger is not Raytheon. It is United Technologies. So, but they kept the name of RTX. There you go. That and a lot of other useless trivia you can get here. Yeah, we can keep the EOG chat going in Discord. That's great. That's a good idea. Let's do that. Mr. Income says he cut it back to 300 shares, some time ago. More trimming coming almost certainly. Okay. Well, there's just like Michael Swamy is the king of utilities. I know Mr. Income is the king of energy and petroleum and that whole realm. So you have a lot to offer to us, my friend. Yeah, Legendary. Look into that Discord if you're into those kind of things, and follow that link. If you can't follow it, sometimes they expire. If for some reason you can't follow the link, shoot me a note here in YouTube. I will get that and I'll fix that link for you if it needs to be. The last time I did it, I think I set it up to be in infinity, so it should not expire, but you just never know. I'm not the greatest at this. Let's see. Yeah, you and me too, Michael. You a virtual fount of useless information. All right. I like the knowledge you have and are share with those who may have just begun the investment journey or seasoned. I've been investing about 5 years, but still learning. Hey, man, we are all still learning. And the cool thing is that every quarter when earnings comes out, we're all getting it fresh for the first time. So, yeah, that's what this is about. This is about us learning from each other. And since you're kind of new to this, I will share one thing with you, and that is that we are not competing with each other. We are trying to help each other be the best investors we can be, because at the end of the day, we're not in competition. We are trying to grow together, and we all want to be successful, and that's what this channel is about. Great, Michael. I'm glad to hear that. He joined the Discord. He finds it worth it. Yeah, Discord does need some more regulars. Let's see. Yeah, Jim, this is a great point. If you're doing it right, you never stop learning. That's that, when we talked about how do I get from good to great? It's just this much more every day, getting this much better. So there you go. Well, guys, we have been almost an hour and 5 minutes. So I'm going to get off of here and go and kick back and relax. I'm going to go to bed early, I think. I'm getting too old for this, but I'm super glad you guys joined the program. If you want to join the Discord, if you want the buy me a coffee thing, all of that is in the notes to this video, to this live chat. And with that, I'm going to get off of here. I'll get out of your hair, and I will see you on the next one.